When it comes to areas outside financial services, we're seeing payment systems, be it payroll systems, be it areas where people process payments through their banks. We're seeing storage documents being targeted, where people will steal documents, especially insurance, where we're seeing policy documents being stolen, some strategy documents, and they take these documents, publish them so that you can pay them money. We're also seeing cases of sabotage, what we call pretty much ransomware attacks. We do have some SCADA systems and then email systems, mainly phishing attack, but again, loss of data in those particular spaces. Globally, what trends are we seeing that are impacting the African cyberspace or cybersecurity market? We've seen quite a lot of analytics and automation of security operations, what you're calling SOA. We've seen quite an interest from quite a number of players in the market. We've seen an interest now in metrics, especially determining risk appetite, tolerance, and threshold, pretty much quantification. We've seen an interest in detection, extending the scope of detection and response capabilities. We are seeing organizations are now just not focusing on network. They're going into endpoints. They're moving these into fraud systems. They're moving this outside their typical network traffic monitoring. I talked about security automation and orchestration. Privacy is becoming a major issue. The previous speaker, Rose, talked about this a little bit. And then there's an embracing of cloud and software as a service, intelligence, information sharing. And the very big one is cyber insurance. I think that's where we are all headed. And quite a number of players in the region are picking this up and building capabilities and capacity around cybersecurity. And the key one where now the business wants to be part of the cybersecurity discussion, which is the ERM integration, which we're now seeing as part of the discussion. And people are asking, why can't we discuss cybersecurity the same way we discuss credit risk and all these others? What is the impact? What is the impact of all these attacks? The number one impact is the loss of funds. And the main threat scenario that people are using, or rather the malicious actors are using, business email compromise, payment fraud, affected industry led by banking, followed by retail, legal firms, insurance, and manufacturing. We've seen loss of service, being ransomware, denial of service, employee third-party errors. Remember, an error is also still leads to a loss of service. So it's an area that we're also looking at. And then, of course, loss of data, mainly phishing, data leakage. And with the new data privacy laws, these cases are now being pronounced a lot more wider than they were before. What are the challenges we're seeing? I think the key challenges still talk about the same issues: insufficient budgets, lack of adequate oversight from senior management, lack of affordable solutions, outdated and unsupported technologies, a lack of security awareness, lack of trained and experienced professionals, poorly drafted and implemented cybersecurity policies, laws, and regulations. So both internal and external, we are seeing cases of a lot of policies and procedures that are poorly drafted. When it comes to implementation, it's almost impossible to implement some of these laws. We also have a case of lack of locally researched and validated cyber threat trends and patterns, low adoption of standardized cyber risk management practices, lack of risk monitoring and threat detection capabilities, low adoption of risk metrics, and the very last one is threat intelligence as areas that are gaps that we see in the market. So over to the topic of the day. What are we really addressing as organizations? When you think about the evolution of cyber risk management, we need to ask ourselves, what are we evolving from? Currently, most organizations have two ways of looking at cyber risk. The first one is around development of a risk register and the management of controls. So we have what we call a threat-based cyber risk management program, where you have threats, you have your likelihood, you have your impact, and you have a risk register. Organizations have risk registers. And then as a way of monitoring those, they will go ahead and have IT implement or security teams implement the controls. They'll have external auditors come in and audit these controls and a continuous monitoring. So literally, if you're a board member in one of these organizations, your focus really is waiting to see what are the audit reports saying about your risk and what is the risk manager talking about the risk register. It's a very difficult cycle because we are responding to threats. In most of these organizations, we are so much focused on threats that we are not seeing the bigger picture. And that is why we are struggling to get cyber risk discussions into the boardroom. I'll give you an example. In a typical boardroom discussion, you will get board members waiting for the external auditor to come in with a list of vulnerabilities that were detected, or maybe threats that they are worried about. Talk about malware. If you think about malware, that is a threat. It's not a risk. You can have malware and the malware can be stopped, but the risk really looks at different aspects. beyond just the threat. So that is an issue that we are facing and an issue that we need to address as we continue. Think about how we are monitoring our environments. We have threat scenarios, we have in-scope assets, we have monitoring rules, we have triggered events. So literally, we are sitting back and just waiting to say, today I saw a failed logon. What does it mean? Today I saw malware. What does it mean? I saw a rogue device. But you don't have the bigger picture that helps us to really look at what that particular malware could lead to. So the current threat-focused cyber risk management approach is reactive. It is too technical. If you have a board session, trust me, sit back, or rather ask some of the board members, what does a vulnerability mean? 90% of them don't understand it. So they're very technical, they're siloed, they also have irregular risk audits. Once you have a risk register, some organizations have an annual vulnerability assessment, and they're okay. There's also manual and tedious. We don't have systems that allow us to go in and continuously run this risk on a day-to-day basis. When you think about the challenges, again, of this particular approach is lack of standardized measures, lack of asset information, informal analysis methods, and then the focus on system level versus business level. Credit risk looks at the business level. They don't go in and start looking at specifics or the technical aspects of the loan. They look at it and say, this particular individual we've given money to, they're likely not to pay. And then they look at it as a bigger picture. How do we manage it? We are not bringing the cyber risk discussion outside of IT and technology. Same thing with market risk. You could have invested in a bond or in an equity, and you look at your portfolio, and that is what you're talking about. We talk about cyber risk. We need to evolve. We need to evolve cyber risk because now we're in the cloud. We're in all these ecosystems that we now need to manage. In the increasing ecosystem complexity, we have to evolve beyond just the areas we are looking at. So what are we proposing? What am I proposing? When you think about your health, I want you today to think about your own health. Every single individual has a profile. This is your body profile. You have your biometrics. You have your weight, your age, your height, your sex, your family history. You also have a possibility of getting a disease based on your profile. If your parents had diabetes or blood pressure, you're likely to get those diseases. You're likely to be disabled. You're likely to die. We'll all die at some stage, but you're likely to die based on those things. And therefore, that helps you to form a particular lifestyle. You live a particular lifestyle informed by the risks you carry. And that's what you call your health preparedness profile. Let's move to the next level. You now look at your wellness. You have what you call physical wellness, and then we have what you call medical wellness. Excuse them, it should not be mental, it should be medical wellness. Under physical wellness, it's your exercising, it's your weight management, it's your steps. Under medical, it's your physical. You go for physical checkup, you go for therapy, you go for regular checks, you have blood checks. And then you have what you call morbidity. This is the likelihood of a disease. How likely are you to face a disease? And the diseases that are diabetes, cancer, and all this. And then there are symptoms that point to that. And then the outcome really is the likelihood of an infectious deficiency, hereditary disease that are likely to face because of the way you're managing yourself. Some people are lucky. They don't have any underlying conditions, and therefore they'll be okay. But if you don't manage this on a regular basis, you face challenges. When you think about the possible outcome, you look at what are you likely to face? Are you likely to have a disease, disability, or death? And how likely are you to have this disease? When you think about COVID, anyone who, they were talking about over 65, people who had underlying conditions, diabetes, they were likely to face this. So when you look at the health risk exposure, it gives you a very simple formula that transforms how you think about your risk. We do this every day. Why can't we take the same approach and use it in cyber risk? So think about cyber risk. If you look at the table that I'm sharing here today, when you talk about risk preparedness from a health risk, we look at your biometric, we look at your lifestyle. From the cyber risk side, we look at you as an organization. You have firmographic, you're a bank, you carry more risk. Again, we look at your lifestyle. If you're looking at nutrition, on this other side, you look at your governance, you look at risk management, you look at your resources, you look at your processes. The second aspect is risk reduction. Now that you know you're carrying risk, how do you reduce the risk? On the health side, you have what you call wellness or medical wellness. You have what you call physical wellness. On the other side, you have likelihood controls and you have impact controls, controls that are likely to reduce your risk. And then you have impact controls, those that will reduce your impact. For example, malware is really much a likelihood. If you stop malware, you reduce the likelihood of an attack. If you have monitoring, you reduce the impact. And then you have detection. If you are likely to face a particular disease, you're able to look at the symptoms. For example, COVID, if you have a fever, your sore throat, a headache, and high temperature, we assume you're likely facing COVID. The same thing in cybersecurity. We do have indicators. So if you see a failed logon, you see malware combined with DDoS attacks, you're likely facing a ransomware attack. And then we have quantification. What is the likelihood of you, again, getting diseased or dying from a disease? When you go to the hospital, the doctor will tell you you're facing, it's a chronic, or it is stage 4, stage 2, stage 1. So we're able to quantify what it is you face from a health perspective. The same thing should be able to quantify from cyber risk, what you're calling risk exposure, and also what we're calling loss exposure. As you move down, we now look at this and say, let's expand this and try understand how then this fits into your typical cyber loss exposure. You do have controls, you do have inherent risk, which is your thermography, you do have risk scenarios, you do have risk oversight, and it gives you a very simple or clear breakdown or some of the areas you're likely to face, all the way to loss frequency. There's enough data in the market now to profile you as an organization, because remember, thieves target the same organization. If you're a bank, thieves will target you. If you're a particular size and they feel you have weaknesses, then they'll continue targeting you. So we need to evolve. What I'm saying is we need to look at all these aspects in terms of a health perspective. The same way we manage our health risk, we now need to look at it and start managing these things in a certain way. So what does it mean to evolve? We need to move from cyber risk management. We need to move cyber risk management to the same level as other areas of risk, market risk, and also credit risk, not just an IT issue. We need to understand the legal implication of cyber risk as they relate to your organization's circumstances. We need to have adequate access to cybersecurity expertise. Discussions about cyber risk management should be given regularly and adequate time on board. And then we need to set the expectation and establish enterprise-wide. The discussion around evolution of cyber risk is moving from IT. Let it become an ERM issue. We also need to make sure that our board management and boards and management discuss cyber risk options, including avoidance, transfer, acceptance, and all the options that are available to the organization, so that we don't carry risks that are a little bit too much. I'll give you an example. There's a financial organization, a very small organization, that is looking to launch mobile banking. They don't have controls. Currently they're making, I would say maybe 200,000, 200,000 is lower. I would say they're making maybe $1.2 million a year. The risk they're bringing on board by just launching the mobile application is almost $500,000. Is that risk they really need to pursue? I don't think so. So the issue of us evolving risk management requires us to look at the different facets of cyber risk or risk and ask ourselves, what is the right level of risk that we should be targeting, and how then do we build that? On the next chart, you look at things that we need to look at. We need to look at our risks. We need to look at our assets. We need to look at our threats. We need to look at our incidents. What is our risk profile? The same way we talk about our health profile. What is our exposure and what are we exposed to? What are the scenarios? And then in terms of assets, can we focus on the assets that are likely to cause us more headache rather than spending money buying big tools that will not address everything? All the way to asset clusters. If you were to get a report today about an asset attack, let it be so targeted that you know how to remediate. All the way to threat scenarios, threat indicators, monitoring rules, and then incident management. I have 25 minutes, so I'll try and move as fast as I can. We also look at what are the characteristics of this new risk-focused approach, what we're evolving or transforming to. They has to be proactive. It has to be business-focused. It has to be collaborative. It has to be regular and continuous. It has to be automated. We cannot continue doing the same thing we were doing with enterprise. With cloud and now all the interconnectedness, there are too many risks that we need to address, that we need to pay attention to. Now, how do we get there? We've seen a lot of maturity around cyber risk management. We now have a lot of capabilities. When you think about your threat data, we now have information from CBEST, from TIBA, from MITRE, from SAMA. When you think about your threat intelligence, when you think about your target, what assets are being targeted, and how do you build controls? You have ISO 27001, you have NIST. So you have all these frameworks that have matured enough that to be able to give you data that you need to be able to continue building. I'll be sharing the slides. So if you need more data on what this, some of these definitions, I've provided those definitions there. So you can be able to look at those and appreciate where we are going and what we need to do to get there. Now, thinking about characteristics of a mature cybersecurity risk program, they have appropriate policies and procedures. They are cost effective. We are going to face a challenge with cost, no matter how you look at it, because cybersecurity is very expensive. We need to ask ourselves, how then do we reduce or build effective controls without spending too much money? We need education and awareness. We need to clearly define the roles of the different personnel involved. We need to get board members information they need. We need also to have meaningful metrics that allow the organization then to appreciate what you are doing in terms of cyber risk management. So as I think of this in a typical step-by-step approach, the first thing we need to ask is a strategic shift from to reduce exposure. When you go to hospital, you don't go to hospital because you're looking to detect symptoms. You go to hospital because you're reducing your exposure to a particular disease. It's the same approach we need to look at. Number two, we need to look at business integration of cybersecurity issues. And then very final, we need to streamline cyber risk models versus extensive cybersecurity frameworks. Look at your cyber risk model and look at which framework fits that particular approach rather than going out to implement 15 frameworks that don't match. With that, then we are able to sit back and look at the different aspects. So this is just data that you will get in the slides after this, but we look at cyber risk preparedness and ask ourselves, how mature are we? We move from that, we start looking at risk reduction. How do you reduce your risk? We move further, we ask ourselves, how then do we detect, if at all we are prepared, we have reduced risk, but we still have certain exposures. How do we detect those exposures? And then the very last again on that one is, how do we quantify? Without quantifying risk, you don't know how fast to respond. And that is an issue that we have to look at and be able to respond. So again, just summing up, we are embarking on a cybersecurity transforming journey. When you get on this journey, it's important to create meaningful measurements to understand risks in our environment. We need to prioritize and invest in capabilities that address risks. We need to effectively communicate risks across the business, because the evolvement is about transformation. It's not change. Change means you can come back. We are transforming. Once you go cloud, it's very difficult for you to go back on premise. And therefore, we need to look at risk in the same way and behave the same way. And in summary, how do we do that? We need to ask ourselves, how does actual risk compare to our risk appetite? When you go out and you're looking to buy food, you buy enough food so you can eat and just feel satisfied. You don't go out and order 15 plates when you know you can only finish 2. It's the same thing we look at when you think about mobile risk, mobile banking. You don't go and start deploying a system you cannot protect. What assets represent the greatest risk exposure to the organization? Did risk decline or increase in the last quarter? What percentage of aggregate loss exposure is driven by what control deficiency? So those are questions that we continuously need to ask ourselves as we build our frameworks and we think about the evolving. Digital is here, digital will live with us, but we now need to ask ourselves, what do we need to change? And when you think about that change and what we need to do, it's very important we summarize it, but looking at the same way we manage our health profiles and health risks, so that we don't get stuck trying to fix things that are not technical with all these soft processes. Thank you very much, Gilbert.